a lot today. Big shout out to the members of the channel. I'm gonna cover a few things in here for the members. We're gonna be talking about silver. We're gonna be talking about the SPY. Gonna be talking about MicroStrategy. Gonna be talking about Bitcoin. We're gonna talk about a whole list of things. So big shout out to the members for all the suggestions today. But let's get straight into it. Remember, I'm not a financial advisor. None of this financial advice. So Bitcoin right now, we are at 78.2K inside of Bitcoin. It's kind of funny because it hit exactly on the dot, the number that I thought it was going to go to. Down 10% in the last 7 days, 14% in the last 14 days, 14% in the last 30 days, 18% in the last year. But look at my Fibonacci, literally right on the dot. And I'll explain how I got this right on the dot too. So yeah, it went a little bit below it. But yeah, 74K. I predicted it was going to go to 74K. And that was for multiple reasons. But the main reason was that the previous pullback that we had, significant support all the way down here at 74K. So I knew it was going to come back here and drop down to there, because if you also come back here, where was the resistance at that previous level back here? 74K. 74K is significant support, significant resistance. So that was right on the dot, right on the money. And if you come all the way back here to that previous rally, it's kind of close, but it got up to 69K. But yeah, 74K right on the dot. So that's pretty interesting that it actually hit like that. So yeah, I think that was a pretty good call on my behalf. So big shout out to you guys. Big shout out to anyone who has made any money like shorting on the way down there. And right now, I wouldn't focus on shorting because I'm not too sure if it's going to keep dropping or not. But we're going to go over a few things that I think might happen soon. So stay with me here. Stay with me here. Let's go to the 4-hour chart. So we're going to break down on the shorter time frames, and then we're going to look at the other ones. A possible bear flag. Well, no, not a possible bear flag. Let me look at this for a second. Okay, this is a possible ascending triangle forming. And a ascending triangle would look like this. It's a bullish pattern possible that this is forming up right now. And then where is my chart for this? So yeah, ascending triangles are bullish patterns. There's a possibility we could get a relief rally here, but I'm not 100% sure, so don't mark me on that. So that's one thing. If we pull back here, if we break this, then we're coming down to 69K. We do not want to break this level at 76K. If we drop below 76K and get to 75 and continue downwards, that could bring us all the way down to 69K. And again, how I got 69K is if you come all the way back here, that was the previous high inside of the last area. Like we dropped down here and hit 69K there. Also on support back there. And then back in 2022, I got to go back to the daily chart for that. But yeah, back on 2022, or 2021, we can actually see that we hit 69K as the all-time high in 2021. So if our next pullback, not even if, but the next pullback that we get, I don't know if it's going to pull back now. I don't know if it's pulling back in a month. I don't know if it's pulling back in 2 months, but I'm pretty sure it's going to continue to pull back eventually. So that next pullback is going to be 69K. We've already touched 74. Next will be 69K. And then you might see a little bit of a relief rally. And then from there, we're looking for 50K. Why are we looking for 50K? Because of the lows back here. And this is the exact way that I found out that 74K was going to be the bottom. Right down here, we have 50K support. We have 50K support / resistance here. And then back here, we hit 50K. It was significant there, and significant right there. Let me zoom in so you guys can see all that. So 50K is a very significant area for us. So after 69K, we're then looking for 50K. If 50K is broken, I don't want to say all the way down here on 15K because I don't think it's going to do all that. But we have 30K support right here. You can kind of see I'm still sorting this out as we go. We have 30K support, very significant support there. And right before we took off, that was resistance. After that point, we were up from there. So 30K is a possibility. I'm not going to even pretend to try to plan the bottom because I don't know when it's going to bottom out, honestly. So yeah, After 50K, I'm at a loss of words after that. 30K, possibility, there's a possibility 30K can happen. That's why I have this support here. But hopefully it stops at 50K. But if not, then 30K would be that next logical support. Well, technically 40K. If you look at this support here, technically 39-ish. But look, like I said before, I'm not going to even pretend to try to be able to track at the bottom here. But 40K could be a possibility as well. So, but what we want to worry about right now is what we can, not what we can control because we can't control it, but what we can track for now. And what we can track for now, come back over here to the 4-hour chart, is this. So we're just trying to see if it will continue downwards. And it looks like we're building an ascending triangle. Now, remember, ascending triangles aren't always bullish. So that is something to keep in mind. I think it has like a 78% win rate to the upside. So it's a high likelihood that it will continue upwards until about 80K. We'll see if it gets rejected there or if it continues. And then we have this. This is the MACD. We're having a lot of buying pressure coming in. So more buying pressure should actually come in for the MACD. So yeah, that is pretty bullish for us. And divergence, bullish divergence. As you can see here, we kind of have higher lows on that MACD down there. And that is a good sign of bullish divergence. Kind of higher lows, but they're kind of the same. But I'm just looking at this area here. So yeah, it might be bullish divergence. Let me say it might be. I'm not 100% sure right there. So then we can come back to the 2-hour chart and break this down. This, we do not want to go below this. Like I said before, if we do, we're hitting 69K if this does not hold. And that's pretty bad if it happens like that. So we don't want to see it. Now, the percent R trend exhaustion is showing the short-term trend up here far exceeded the long-term trend. Not a good sign. What's going to happen here is this short-term trend is going to end up pulling back. And then the long-term trend might pull back with it. But sometimes, the short-term trend breaks out even more. The long-term trend comes up, and then the short-term trend comes back down, and then they continue back up together. If it's that scenario, we would see this pulling back down here to this area on the ascending triangle and then breaking out. If that happens the way I just mentioned, that's how it would look. And then you would see that break out from there if it broke out to 80K and then possibly back up to 83K up here, or 84K really. So that's what we're watching out for on there. I'm gonna keep you guys updated and keep making these videos to make sure we get all that out there. Bullish divergence on the 2-hour chart. Let's pull that back up. Yeah, this is the bullish divergence here, as you can see to the right. Higher lows on the MACD, bullish divergence on the 2-hour chart for the MACD. And we should start getting another wave of buying pressure after we have that pullback. If we have the pullback, again, I got to keep saying if, because I think it's going to pull back here. And then the real telltale sign is if we break this, that's going to be bad. It's going to bring us down to 69K. So we'll keep watching that for the next few days. And just like I mentioned before, when that short-term trend on the percent R trend exhaustion pulls back, if it intersects here, it has two choices. It can either continue down, both the short and long-term trend continuing down together, or both of them continuing upwards together. But with the way it's pushing up, I think they're both going to continue upwards. And that is the perfect example for the 2-hour chart. This is the 2-hour chart. That's the perfect example for here. It's probably going to do something similar here, but we'll have to see. We'll have to wait and see there. So that's pretty much what we have there. Overbought on a 30-minute, but look at how the long-term trend is certainly, is for sure pulling down. So we might see this coming up a little bit and continuing to pull down. If that happens, again, we pull back down to 76K and then possibly break out from there. So just got to be patient on that one. This is the MACD here. Yeah, nothing really much to look at there. So let's now go to the daily chart on Bitcoin. This is the daily chart here. So on the daily chart, Bitcoin is, let's go to the percent R training session first. It's becoming oversold. That's a good thing down here because this is how breakouts start. They start down here when it's oversold. So this could be a good thing, and this could be the start of the next relief rally, possibly bringing us to 83K and possibly even up to 86K. It's gonna have a hard time trying to break past 86K though. Like that 86K is gonna be our new 100K. Because remember when we tried to break out before, like we got stuck at like 98K. We couldn't get to 100K, so it'll be like the new 98K for us. So that's going to be the next barrier for us to try to break before the continuation of this bear market. And I think we are in a bear market, so you got to be very, 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 very careful on that. Lower, this is the MACD again, and this is on the daily chart. Lower highs on the MACD. So that was a clear indication that we were in for a crash. The second January 6th hit, and then January 14th, and then it started to sell off. That was a clear signal that we were selling off, and I did mention that actually in the previous videos if y'all want to go back and watch those. And yeah, that was bearish divergence. As you can see here, the lower highs on the MACD, which is the bearish divergence. So, and the whole time that happens, you start to see the highs on the actual charts. The price is increasing, which it kind of tricks people. That's how bearish divergence works. It tricks people and it makes you think that we're actually going up. Because look, the highs are becoming higher, but then boom. The whole time that was happening, we were in a rising wedge, which I mentioned that before. We started to build a ascending triangle where we actually broke out, but I also mentioned how that was probably going to be a trap because we're still within a rising wedge, and we also had that trend line right here. This trend line that we broke right here. I know I got a lot of stuff drawn on this chart, but you know, this long trend line here. And the reason why I leave all this old stuff on here is because this is how I continue to track what happens next, because all this old stuff is very, very important for me to leave on this chart in order for me to keep tracking things. So all this old stuff, I need to have these there. This is a bull flag, the opposite of a bear flag. This is a bull flag right here. Very important to leave that there. This is a falling wedge. Very important. And this is a bullish expanding, or no, a bearish expanding triangle, which is another way that I was able to track this stuff. So I like to keep all of the different patterns here so I can spot them like that and just leave them on my chart. And then this was the rising wedge, and now we're building like a micro pattern here, which is our ascending triangle. Actually, we're about to break down right here. By the time I put this video out, it might already be down. But yeah, we're about to break down here. Notice how it's not pushing up right here. The sellers are not letting it get past this area here. The buyers are starting to get weaker because you're starting to notice that these candlesticks here, they're getting smaller and smaller. These candlesticks, these breakout ones, these green ones, they're getting smaller and smaller until eventually it breaks down to 76K. From there, there's actually support at 76K. Boom. So again, if we pull back down here, you might even see it pulling a little bit below here, like it'll wick, like this little green line that's called a wick on the candlestick. You might see it wick down to 76K because there is support at 76K. So you might see that wick hitting down there. So if it does break this level here and touches 75K briefly, just know that you might get a wick like this before it goes back up. So don't try to short just because it wicks. Like you have to have that confirmation, and the confirmation would be this breaking 74K. If this breaks 74K and then like you don't just see a little wick here on the charts and it actually starts to go down, that's when you know that you can short from about 73K down to 69K. Then you can actually short it and you can benefit off of that price change right there. But you need that confirmation first. All right, so we got pretty much everything we need for Bitcoin down right there. Now we'll do the weekly chart, and I usually don't look at the monthly chart, but again, shout out to the members. Someone mentioned something about the monthly chart. I don't think it was a member that actually mentioned the monthly chart. But yeah, I do want to go to the monthly chart too. This is gonna start getting a little tricky because I got whenever I get to the bigger time frames, there's just too much stuff, so I'm gonna take it all off. So we have this percent R trend exhaustion showing the trend continuing downwards. And I want to show you guys something. And this, oh wait, okay, yeah, I brought it back. All right, I want to show you guys something because this is what I was looking at before, and why this little theory here that I had was invalidated. So this was the percent R trend exhaustion, and we were going in a clear cut pattern. Like the pattern was clear. But I mentioned if this breaks here and doesn't come up here, then the bull market's not happening. Because I seen someone talking in the comments, and look, I read all the comments. I know I probably shouldn't because there's so much negativity that people will put out there. Not everyone though, but I read the comments, and I seen someone mention something about Avantis, saying I thought you said it was going to go to $5. Yeah, $5 if we were going to continue to have a bull market. And I always mention this on every single video, but some people don't watch all like the whole thing. I always mention that if this is broken on the percent R trend exhaustion, the bull market is over and it's invalidated. There's no bull market. There's no more bull market if this goes below that area. And that's exactly what it did. So it was invalidated, it went down, it continued downwards. And that's how it went. So you just have to have these confirmation points. Like for me, the confirmation point was if it goes below that level there, then it's invalidated, right? Then that means that it's confirmed bear market. And that's what confirmed the bear market for me. And that's why I will not switch bullish until we go above 108K. And why is that 108K the level that I'm going to look at? Let me pull back here. Sorry, I'm all over the place here. 108K is the last high here. So the bull market is back to confirmation once we get above 108K. If we don't get above 108K, we are not in a bull market, in my personal opinion. So that is how. And then, even if that's confirmed, we then have to get above 126K. Because what if we don't? Then it could be a bearish double top. We could hit 100 in we can hit 126K again and create that bearish double top. And also remember what I mentioned here. Clear cut pattern for a head and shoulders. I've been saying this, and I'm going to keep saying it. That's why I have these charts here to show you guys. Bearish head and shoulders pattern. Bearish head and shoulders pattern. I don't know what I said. I said pattern or something like that. Mumbling. But look, it was a clear head and shoulders pattern. And look, sometimes the right shoulder is smaller than the left shoulder. Just like in humans too. Like some of our bodies aren't our bodies aren't the same. Like sometimes some people have their eye like farther apart or their nose somewhere else, right? And the same thing here for chart patterns. The right shoulder wasn't as big as the left shoulder. It's kind of leaning, but it's still a head and shoulders pattern. Let's draw that out actually. Boom. Yeah, I knew that was gonna happen. But still, head and shoulders pattern. So that was a bearish pattern. Let me get all this off. So yeah. And then we have the MACD on the weekly chart. And on the MACD, you can see there's a lot of selling pressure and a lot of selling pressure starting to come back in. So we could have another push downwards. Bearish divergence on the weekly chart. Or yeah, this is the weekly chart, yeah. Bearish divergence, as you can see down here. And next, now that we had that bearish divergence, start to look for bullish divergence. So when this is done, and we have buying pressure here, when you see the next selling pressure, it should be slightly lower. That is the start of bullish divergence. And then you'll see it like this. And then boom, it'll break out. And that's why I said towards the end of this year of 2026, we'll start the next bull market. And let me show you that one more time. Look at the time periods on the bottom of the chart too. This is probably going to end up doing this, maybe selling off more. And then we're going to see buying pressure. Let me start that off again. We might see something like this, and then we might see buying pressure coming in, a little bit more selling, and then we'll see the buying, selling, and then buying. And then going into the end of this year, into next year, that's going to be the start of the new bull market. And all off of the bearish divergence going into bullish divergence. Once we get that bullish divergence starting, you're going to know that the market is bottomed out. I would say around July to August, we might be bottomed out in the market. Maybe even before that, but I don't know. I can't really track that. But yeah, that is what we should end up seeing there. And let's pull up our monthly chart. This is the monthly chart. Honestly, I don't like looking at the monthly chart because it's too long of a time frame for me to look at. Some people, they thrive with the longer time frame, some people with shorter. For me personally, I like doing the weekly chart and below. The weekly chart and below works for me best. So yeah, so the monthly, it is what it is. The buying pressure should start coming in again towards the middle, maybe August of 2026, August of this year. Because look, if we get some more selling, and then buying coming in, and then buying pressure, boom. And then on to the MACD, we're creating another head and shoulders. So 2028 to 2029, going into 2030, massive sell off. Massive sell off. So I think there might be a generational sell off in 2030, like to a point where like you're like, what? How do we go from 200K to like 20K? I think we're gonna have one of those massive sell offs coming into 2030. Just based off looking at the MACD, like it looks like we're creating a head and shoulders on the MACD on the monthly chart, which is super long term. Because look, by the time August comes of this year, we're gonna get another buying wave, but it's not gonna be as big as the other ones because we're creating a head and shoulders, and then massive sell off coming in at 2030. So boom, 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 head and shoulders, massive sell off into 2030. That's how I'm seeing it. So maybe 2029, 2030, something like that. So yeah, that's what the long term is looking like for me. But yeah, towards July, August of 2026, that's when I would say that for me personally would be a time for me to load up. I can't say for everyone else because like I always say, I'm not a financial advisor. None of this is financial advice. I have to legally say that. But personally, for me, I'm looking to load up July, August 2026. Yeah, somewhere around that time. And then from there, massive buying pressure. And when I say load up, probably Bitcoin. Like honestly, I'm starting to stay away from altcoins, just because I just seen how things went in this last cycle. And if you look at most of the altcoins, they didn't perform as good as Bitcoin, which is rare. Like usually the altcoins perform way better than Bitcoin, but we have not seen something like this ever. Bitcoin performed better than most altcoins. Like let that sink in. That is usually not like that, but I think things are changing. And the big money people, they're focused on Bitcoin. The billionaires, they're focused on Bitcoin. Institutional investors, they're all focused on Bitcoin because they know Bitcoin is the number one. And remember, they're old school investors. Why would they invest in altcoins? They're old school. They're going for Bitcoin because they're looking at it and they're like, this is where all the money is going to be. Just the way that Bitcoin's coded, the way it is, more can't be created is the OG. So obviously the OG investors are going to go with Bitcoin. Bitcoin went up 700%. 700% for that bull run, right? And you might ask, when did that bull run start? The bull run started January 1st, 2023. So the bull run started January 1st, 2023. The bull run ended October 1st, 2025. So all the way through 2023, all the way through 2024, almost all the way through 2025, 2.75 for 2.75. Yeah, 2.75 of a year. That's pretty much what the bull run was. So that's pretty good. That was a pretty good run. But next time I'm loading up on Bitcoin, and it's going to be around August of 2026. I predict Bitcoin should be around 40K, 40K ish by then, maybe 50. Anywhere from 50 to 30K, that's going to be my load up area. 50 to 30K, 50 to 30K. So that's how I'm going to also do it with the dollar cost averaging. Someone mentioned in the comments, one of the members, big shout out to you, mentioned the dollar cost averaging thing. And that would be my dollar cost average for Bitcoin, anywhere from 30K to 50K. Because I know you mentioned that you tried the dollar cost average here, but it kept going down. That's because the price is too high right now. It's still too high. So even if you bought all the way up here, I still wouldn't be buying it at 78K. I would wait until you see at least 50K. Then at 50K, you can start dollar cost averaging, because as it goes down from 50K, you might even see 40K. You might see 30K. So what I would say, if you have, let's say $10,000, right? You could put in maybe 2,500 at 50, 2,500 at 40. That's 5K right there. And then if it drops down to 30, put in the rest of the 5. Now you have $10,000 cost averaged from 50,000 down to 30,000. So that would be a good dollar cost average area. That's just the example, because I don't know how much you have personally, but yeah, that's a good example there. And remember, I'm not a financial advisor. None of this is financial advice. You got to do it at your own risk. But over here, this is the fear greed index of Bitcoin and stuff at 17. So we got extreme fear again. We're back in the extreme fear ratio, which is why I think that we could be getting a relief rally soon. But I think that we're going to pull that back down to 69K before we get that relief rally. So I think that this ascending triangle that we're looking at is a trap. I think it's a bull trap. And this is how they trap the bulls. So what might happen, we might do this. Let's say, let's give a few scenarios here. Let's say it continues downwards and breaks out. That was the bull trap then. This was the bull trap. This is a bullish signal, but they're trapping you. So it might keep going down to 69K. Or let's say it's not a bull trap there, but it breaks out. Gets up here and then pulls back. Still a bull trap. Breaks out, gets up to 86K and then pulls back. Still a bull trap. Either way, I think it's a bull trap. So I would not be trying to load up, like just do some short-term trading, but I wouldn't try to load up on anything. Actually, it's about to start pulling back down here on the 30-minute chart. Any moment now, that's going to bring it down to here. We'll see if it breaks. Should bring it down to 76K soon. That's what we're looking at there. But yeah, extreme fear. Let's go over some articles here, and then we're going to talk about silver and stocks and some other stuff, MicroStrategy, pretty much all that. So here we have Bitcoin. Bitcoin slides below 80K after $2.56 billion liquidation flush. So part of the reason why things just went so fast is the liquidations. When you lose money, somebody is making money. They get liquidated because the longs, they're being liquidated, and the money coming from the people that are longing Bitcoin goes to the people who are shorting Bitcoin. And that's why the long people are getting liquidated. Their money is getting liquidated and being given to the shorts. So the shorts are taking over. The shorts are raking in all the money. But the money is not leaving. The money is not dissipating into thin air. What's happening to this money is it's a wealth transfer. It's a wealth transfer from the bullish people going to the bearish people. And what happens here is when that money transfers, they're going to keep raking it in, and then they're going to do a relief rally. They're going to put that money back in that they just earned, and they're going to push the market up. This is how bull traps happen, because when they push it up, people are going to start longing, and then the shorts that are still in, they might get liquidated. And then that money is just going to keep going. It's going to keep circulating. And then you get the bull trap. And then the longs are re-liquidated, and the money's going back into the shorts. So that's just pretty much how that is working here. It's a constant wealth transfer. That's why people always talk about the wealth transfer. It's not one big thing that happens. That's what a lot of people get wrong about this wealth transfer thing. Like they're saying the great wealth transfer. And people are waiting for this one thing, which is why they're never going to be a part of the wealth transfer, because they're waiting for this one thing. But what they don't realize, it's a series of things. It's thousands of things The wealth transfer is happening every day. We just seen it inside of silver. And this is why I was trading silver, because I'm noticing that there's money in silver right now. That money is flowing. That was a wealth transfer. Like how it went up, that was a wealth transfer going into silver. How it went down, that was a wealth transfer. That was people doing puts on silver. That was another wealth transfer. And now what are you seeing? A relief rally. This is the pre-market. It's now $80 into the pre-market. Where did silver hit? Hit exactly where I said it would, all the way down here at $67. And I mentioned that I would buy down here, but I did not get a chance. But I wanted to, but I did mention I was going to do it, but I didn't get a chance. But anyways, now we're seeing the reversal up. It's another relief rally. Personally, I am not gonna buy this for long term right now, because I don't know what's about to happen next, and I like to be 100% sure of things before I do it. So I'm gonna do a whole deep dive on silver, and I'll probably end up making my decision after I do that deep dive. So you guys get to see this real time of me doing this. But let's keep going off this. So CoinGlass data showed $2.56 billion in Bitcoin liquidations in recent days as crypto fell with broader risk assets. Analysts tied the move to macro-driven risk-off positioning, including renewed uncertainty around the AI trade and shifting rate expectations. Precious metals volatility spilled into wider markets after Trump picked Kevin Warsh as his nominee for the next U.S. Federal Reserve. So people are looking at it like, all right, we're about to go into a recession, which we already are in one. But again, people are looking at it as it's like one big thing. Like, no, the recession is multiple small things over a period of time. It's not one big thing. It's multiple things over a period of time, just like the wealth transfer. And that's where people get that wrong out as well. Like, we've been in a recession and we keep hitting new points in the recession, right? So this is almost like a reverse recession. Like, asset prices are being inflated. SPY, silver, gold, and their money is coming out of risk on assets into risk off assets. Gold is not risky. Silver is not risky. S&P 500 companies, SPY, all that, not risky. But Bitcoin, risky. Crypto, risky, right? And some people would say that the SPY and other stocks are risky. No, like the top stocks are not risky. When you start to get into the smaller mid cap and low cap stocks, those are kind of risky. And I've been reading a lot of places where people are saying for the first half of this year, small cap and mid cap stocks is going to be where the money is starting to flow. And you can notice it a little bit. We're seeing some money is starting to flow back into some small caps like Lyft. This is a small cap, and we might start seeing money flowing back into Lyft. So that might be a stock that you could pay attention to. Personally, I think it has a little bit more ways to go down before it goes back up. So that's just what I think personally, especially when you look at the weekly chart here. I think Lyft has a little bit of ways to go back down. Personally, Lyft, $13 is a good buy point for me. If it's not at $13, I don't want it. So I think Lyft could come down a little bit more to $13 and then rally. Might be a little bit of a relief rally and then a further pullback towards the end of the year to 12 and then go back up. So I'm looking for a $12 Lyft. That's just like one little thing. But yeah, that's not the main thing I wanted to talk about. But anyways, a lot of people also have been talking about how MicroStrategy is about to get liquidated at a certain price. And this person, he kind of has a good point here. He said he has a whole thread, so I'm gonna read it. It's gonna be a lot. MicroStrategy, no, that's not how it works. So he's pretty much saying that MicroStrategy is not going to get liquidated right now. So he's saying Michael Saylor cannot get liquidated if Bitcoin drops. And he said he sees this narrative spreading, and he's going to explain exactly how it works. So he said MicroStrategy is not trading on margin, and it isn't borrowing from an exchange with Bitcoin as collateral like retail traders. No broker, no margin account, no liquidation. Then he says most of MicroStrategy's debt is convertible notes. They borrowed money that can convert into MicroStrategy stock. So they didn't borrow money to convert into Bitcoin. They borrowed money to convert into MicroStrategy stock. So that is a big thing that guy's saying. I don't know how true it is, but this is what he's saying. He said, not Bitcoin. If Bitcoin drops, lenders don't get forced to sell their coins because they lended into MicroStrategy stock. And I think MicroStrategy is then doing something with those shares to then put it into Bitcoin. I don't know what, but he's going to explain it. The old margin call loan, gone. Back in 2022, there was a Bitcoin collateralized loan. They added collateral, then paid it off later. That liquidation path no longer exists. MNAV doesn't mean liquidation trigger. People are confusing MSTR stock valuation metrics with forced selling. A lower MNAV hurts their ability to raise capital efficiently. It does not force them to dump Bitcoin. So when would they sell Bitcoin? Only if they choose to for corporate reasons like debt maturity, strategic treasury moves, capital restructuring, not because price hits a magic level. Volatility in MicroStrategy stock can be extreme, but that does not equal forced selling of their Bitcoin. The seller liquidation story sounds dramatic, but structurally, it's just not how their balance sheet works. So yeah, I mean, I think he has a lot of truth there. That what he just said. And if you look at MicroStrategy, like this thing is a cash cow. MicroStrategy is a cash cow. In the last month, I don't even want to say how much money I made shorting a MicroStrategy, but I switched to shorting MicroStrategy in like the last month because I was doing other trades, and I'm like, bro, this thing just keeps printing. It just keeps dropping. Now it's not going to keep doing that. If you actually look at the MACD, there's a possibility that we could start creating bearish divergence or bullish divergence. This was our bearish divergence. And now, and let me show you the divergence chart. Boom, bearish divergence. And now we might start getting bullish divergence, possibly. But remember, it's going to follow Bitcoin. And the reason why I say it might, that's because like, oh yeah, and also remember what I said before about the head and shoulders on the MACD. Yes, you can get head and shoulders patterns on the MACD, and that usually causes a massive crash. And that's why I was saying with the Bitcoin monthly chart, massive crash going into 2030. But what we're looking at here could be the start of bullish divergence, but it's gonna follow Bitcoin, so it might not be a big pump. So just know that if we get a relief rally, you might see something in a MicroStrategy, but don't think it's just gonna take off. Like maybe it gets back up to $150, maybe it gets up to 200 or something, and then dumps. I don't think it will though. I don't think it's gonna do that much, just because of how much it's been doing, like how much it's been dumping. I don't think it'll do all that. So be careful with MicroStrategy. It's very risky. Marco Saylor's Bitcoin stack is officially underwater, but here's why he likely won't reach for the panic button. Bitcoin dropped below 76K, putting MicroStrategy's position only slightly underwater, but has not created any immediate financial stress. So they're only slightly underwater below their dollar cost average price. Strategy's 712,000 unencumbered Bitcoin and flexible options for managing its $8.2 billion in convertible debt means it faces no forced selling or near-term solvency risk. The main impact of the price decline is to make new share issuance less attractive, slowing Strategy's ability to buy more Bitcoin without diluting shareholders. So yeah, MicroStrategy is good for now. Pretty much strategy slides, and this is just more explanations on it. All right. So three reasons a strategist thinks Bitcoin could plunge to 40K. Remember what I said. Anywhere from 50 to 30K is the level. They said Bitcoin could fall to 40K over the next 6 to 8 months, and selling from crypto treasuries could exacerbate the problem, such as MicroStrategy. Bitcoin has dropped deeper into a bear market and is now down almost 40% from its most recent highs. So yeah, we're seeing it right now. We're seeing the bear market. This is the bear market. The average Bitcoin winter lasts over a year. That's why I said towards the end of the year. And let's come back up here. The bear market started at the end of last year, October of last year. So yeah, by August to October, something like that of this year, that's when I think the new bull market is gonna start rolling in. So yeah, that's what we got there. Michael Saylor's strategy could sell Bitcoin, and then we just mentioned that he might sell some. Waning demand and liquidity, which that money is starting to switch into stuff like gold and silver and stuff. So yeah, we're seeing that wealth transfer at our very eyes. All right, so we got all that. All that went over. Let's talk about Zcash. I've been saying this the whole time. $210 soon, Zcash. Now it's at $286, almost at $210, like I mentioned so many months ago, because it had topped out up here. So Zcash almost at $210, and it will continue to dump until it reaches $210. So don't say I didn't warn you. That's the next support. Like, look at the Fibonacci's. That is the next support for Zcash, $210. So yeah, should come soon. Possible relief rally before then, and then another pullback. We'll see. This is the MACD here. Bullish divergence. Like I said, possible pullback and then a breakout as a relief rally, followed by another breakdown when Bitcoin continues downwards. So maybe it doesn't hit $210 next week or something like that. And look, we got bullish divergence here, higher lows on the MACD. And then you can come here and see it, higher lows on the MACD. Possibility that we could see a temporary relief rally and then continuing to push downwards to $210. I reckon that this will hit the top of this area here. This is the trend line we've been following to continue this downtrend. So Zcash might hit $360, possibly $350, and then continue down. Or we might see a continuation downwards, and then it hits like 330 or 320 or 300 and then continues, something like that. But it should continue downwards and continue following this pattern here that it is staying below. Overall, this is a bullish expanding triangle. Eventually, it's going to get down to the bottom of it, and then it'll just break out. And maybe it won't do it like that straight up, but eventually it'll start to do it. Maybe it'll flatten out just like how Aster did. Aster was inside of a bullish expanding triangle forever. I think it might still be there. And Aster has kind of just like flattened out. So yeah, let's look at Aster. Yeah, I already took it off of the bullish expanding triangle. Wait, was that it looks actually more like it was, yeah, it was kind of like a descending triangle, kind of a bullish expanding triangle. But anyways, it broke out and then it just kept going sideways and downwards just a little bit. Zcash probably in the same exact boat. Somewhere around here, it's gonna do that. It's gonna go sideways and downwards for a little while until the next bull market. So that's probably how Zcash is gonna move. We're gonna look at MicroStrategy here. Let's do the 4-hour. So MicroStrategy is a little bit different because I have all these different lines on here. So it's going to be a little bit harder for me to track it since I do day trade it all the time. It's a little bit difficult for me to even look at it. Too much drawings on there. Let's see. We're going to pull this up. Yeah, honestly, I see a little bit more selling pressure. It is oversold. If Bitcoin comes back a little bit, then we'll see MicroStrategy go up. But it's all contingent on what Bitcoin does. So if Bitcoin continues downwards, MicroStrategy continues downwards. That's pretty much all I got for that. I mean, yeah, there's not much I can say here. A little bit of bullish divergence, just a little bit, but I wouldn't be too focused on MicroStrategy. Follow Bitcoin, and that'll guide you with MicroStrategy. Because like I mentioned before, Bitcoin going through this pattern here, which is the ascending triangle. If it breaks down from there, we'll see MicroStrategy continuing downwards. Let's pull back up MicroStrategy here. And let's do like the 4-hour. So I would be watching out for $132 to $128 if Bitcoin breaks below that ascending triangle, going below 74K down to 69K. That should break down MicroStrategy down to about 120 to $110. And then we have a support all the way down here at $102. MicroStrategy should hit $102 soon. Very significant support down here. Very significant support at $102. Well, let's just say $100. Like, there's no point to not round it. So that $100 level on MicroStrategy, in my opinion, because I'm not 100% sure, but in my opinion, that would probably be the equivalent. Let me see. It might be the equivalent to like a 69K or a 50K Bitcoin. So all we all have to do is look at the previous high of MicroStrategy back in like 2022. Yeah, that would be around. Okay. So that'll be equivalent to Bitcoin being at 50K. Well, no, because it was at 69 all the way back here. So yeah, if MicroStrategy goes all the way down to $100, it might be equivalent to Bitcoin being at 69K. That 69K support. But as you can see, the way it moves, like it doesn't quite follow it 100%. But you know, it's a little bit inaccurate. So I would be careful either way with MicroStrategy. We can pull up silver now. Let's see what I think silver is coming down to. So we'll start with the weekly chart on silver. So silver's weekly chart, it's overbought. But the thing with a lot of these stocks and like these ETFs, like they can be overbought for an extremely long period of time. Look at SPY. The SPY has been overbought since January of 2024. It's only broken down once, and that was when Trump had his trade war with China. And now it's still been overbought after that. So it's a little bit different when you're looking at stocks and stuff like that. Because silver has kind of been trading in this overbought range, same as Bitcoin or same as SPY since like January of 2024. And it's been steady increasing since that time in 2024. So it's been steady increasing since January 2024, and it's been overbought since then. So you have to be extremely careful because eventually what comes up must come down. That is extremely overbought. The people, this is what I'll say. If you watch all these YouTube videos of these YouTubers, and this is why I recommend people like don't like even my videos, but I'm not like a super bull. I'm not saying you got to get into silver, you got to get into Bitcoin. Like, I'm not, no. I'm showing you guys short-term price movements and what I think the long-term might look like. And I'm being honest. And that's why I'm not getting views, because I'm not being a super bull and not telling everyone, buy. Wealth transfers here. This is how you get rich. Like, no, there's no quick way to get rich. The wealth transfers here, but it's multiple small things over a period of time. This is the new wealth transfer. They're pushing everybody into silver. They're pushing everybody into silver. They're pushing everybody into gold. There is a reason why they're doing this. And the top YouTubers, they know this, and they're still telling you to get into silver and gold. Why are they doing that? Well, they're doing it because you're exit liquidity. You are exit liquidity. What does that mean? When you buy, they sell. As simple as that. Be fearful when others are greedy, greedy when others are fearful. Warren Buffett said it the best. Nothing has changed. Everybody is super greedy right now, super greedy, and they're all piling into gold and silver. Gold and silver might continue to go up, but I wouldn't roll the dice on it. I wouldn't look at this. Look at the MACD. The MACD has not looked at like this since 2011, and this is even bigger of a wealth transfer than 2011. Look at the monthly chart. It has not looked like this since 2011. This blue line here on the MACD has to come back to this orange line. This thing is way overbought. Do not let them trick you. They're literally using you as exit liquidity. We're so overbought here. Now, can it stay overbought for longer? Yes. Can it continue to go up? Yes. Should you roll the dice on that with your life savings? No. Look at the monthly chart. Look at the wick on the monthly chart. The actual candlestick starts at $74. So this is kind of a fair price for silver, but it should be lower. It should be lower. It should be more so around $50 to $40. Way overbought at 109, a little bit overbought at 74. So can it go up a little more? Yes, but I still wouldn't trust it. They're using you guys as exit liquidity. There's a reason why every big top YouTuber is telling you get into gold, get into silver, the great wealth transfer. You're gonna miss it. The dollar's crashing. Like this is how they get rich. This is how they get rich. They tell you to buy something, and then you go buy it, and then everyone buys it. And as everyone buys it, they sell it. Now look, after silver just crashed, what's happening now? Pre-market, it's up 10%. Pre-market, it's up 10%. Because now, what's going to happen? People are going to be like, oh, silver is about to keep going back up. So now they're putting their money back in it. And then they're going to do it, and they're going to do it, and they're going to do it, and they're going to dump on you all over again. We might have a double top forming inside of silver, possibly. Or it could go up there and it could keep going. Either way, I wouldn't trust it. They do this every single time with everything. There's a reason why when everyone's talking about something, it crashes. Maybe the YouTubers aren't doing it on purpose, but the billionaires, the millionaires, the billionaires, the institutional investors, they're watching these videos. They see what everyone's saying. So they're like, okay, the normies are going to buy in. So let's go ahead and dump on them and use as exit liquidity when it gets up to the peak. When it gets up to the peak, they know the normies are getting in. Let's get out now, because they're like the YouTubers, they're and all the other social media people, they're pushing normal people into these assets, and now the rich people are going to sell it because the normal people are in it. Like the normal people, they don't want people to get rich. They want to stay rich. So they're not going to leave their money in there for you to get rich. They're going to take it out so they can get even more rich and you can get even more poor. This is how the wealthy people operate. And it actually is messed up. It is messed up. But at the end of the day, it's a game. It's a game to them. It's a game to all of us. And I'm going to talk about SPY in a second because, yeah, y'all, I got a lot to say about SPY too. So I'm giving you guys the real, and a lot of people are out there are not giving you the real. They're getting more views, and it's making me mad. Nah, but for real, like they're lying. Well, they're not necessarily lying. They're kind of misinformed. Either they're misinformed and they're dumb, or they're lying, or they're just looking super, super far into the future. I'm not looking that far into the future. I'm telling you guys, things are going to get bad and things are going to dump, and a lot of people are going to lose money. And then at the end of the year, things are going to go back up. And then the rich people are going to make the money back. So when they're telling you, oh, yeah, it's going to go up. Yeah, it's going to go up. In 2 years, in 3 years, in 4 years, in 5 years, it's going to go up a lot. And you're going to make a lot if you hold for that long. But most people, they're trying to get rich quick. They're trying to make that money. So what they're going to do is they're going to put all their money in, and then it's going to go down, and they're going to lose it all. And that's why I'm making these videos. I'm making these videos for the people that are looking at it from a perspective of, I'm not trying to put it in while it's overpriced. I want to put in while it's down. And that's kind of how I'm making these videos, because I'm banking on these things going down. Like literally, like I'm making money on the way down. But anyways, we got gold right here. Let's do a Fibonacci here. So for my Fibonacci's, I take it from the swing high all the way up here, all the way down to the low, the last low, which is right there. Really, I could bring it all the way down to here, 2018. Should I do that? That's gonna alter the. Just gonna alter it a little bit. Yeah, I think it should be all the way down here actually. Yeah, because that's the actual bottom that we've had down there at $100. All right, so yeah, and actually we did hit that support. So I'm glad I brought it down a little bit more, because then it would have been inaccurate. But yeah, you can see it hit the support here, and now on the pre-market, it went right up to 450, all the way from 420 to 450 in the pre-market, up 5.93% pre-market. Gold is doing pretty good. Same thing with gold. It's been overbought for a long period of time. What comes up must come down eventually. It's going to come down. Gold is overpriced. I just read a story of of a shooter inside of Thailand. He tried to do an armed robbery and started shooting at people inside the gold stores. A lot of people are noticing that gold's going up, so now they're trying to steal people's gold. So be careful. Don't wear gold chains out, like actual gold chains, even if they're fake. Don't do that. Like, I'm telling you, like, normal people are looking at these YouTube videos of all these YouTubers saying, get gold now, it's going up, it's going up. And some of those normal people aren't good people. And they will try to rob you if they see you with gold. I don't wear gold. I don't wear fake jewelry either. Actually, I do have some fake jewelry. I ain't gonna lie. I don't have any real jewelry, but I do have fake jewelry. Because if someone tries to rob it, I'm gonna take it off. I'm gonna be like, here, take it. Take my gold. Take my little $30 gold chain, right? And I have plenty of those, so they can keep taking them. But yeah, look, you want to be careful with gold though. It's overpriced. I mean the MACD. I've never seen a MACD looking like this on a weekly chart. Like they did their thing with getting people into gold. Like they really sold it. Like these YouTubers, not even just YouTubers, but influencers in general, like they sold this. Boom. And look, this whole increase right here, that's mainly institutional investors and big money. That's mainly them. But right around here, you see a big jump because this is when the influencers started talking about it more. So you see that big jump. So that's why you're seeing like almost like a flash crash and like a pullback. Now, can it continue to go up? Yes. Will it continue to go up? Possibly. But I would not be trying to buy at these points. I would not be trying to buy at these points. This is a clear cut definition of institutional investors using people as exit liquidity, and they will dump soon. I don't know when, but soon. But anyways, we have an ascending triangle, or no, an ascending channel inside of the SPY, the S&P 500. This ascending channel here is completely overbought. This is the monthly chart. Look how overbought it is on the monthly. Like that's crazy. And that's because they keep printing money into the system and they're printing more money. When they print that money goes into assets. And this year alone, Trump is set to print trillions. I don't know how much, but over this full year, trillions is going to get printed. So that money is going to find its way into assets, which is why I say, can things keep going up? Yes. But if you're investing, like you're buying all the way at the top, if you're investing, like these levels right now are good for trading. They're really good. But investing, I just can't justify buying at these high levels and actually buying to hold. I think this is the start of some, because as you can see here, bullish divergence. I think this is the start of bearish divergence. Boom, boom, probably getting another one, and then a massive sell. So yeah, I think it might be the start of bearish divergence. And it's just so conveniently happening that we're about to get into a war with Iran. The United States is about to go to war with Iran, and they kind of confirmed it, kind of. And then there's a bunch of other wars going on. But yeah, we're completely overbought. We're at the top of this ascending channel. Can we break out of it and go up? Yes. But I don't want to put all my money on that because we're overbought. And I wait for confirmation. For me, confirmation would be a strong push towards $800. But then by that time, I would already miss it. So I'm not focused on holding and investing for the long term, though, unless things are cheap, and things are not cheap right now. Things are extremely expensive in the markets. So be careful with that too. Now, as for the short term on the SPY, it's so hard to tell because look, it's been overbought for the longest, and it's just staying overbought. So what I would say is this. Let's go to the hourly chart. This is the hourly chart. Overbought here on the percent return exhaustion. Could this be a double top? Possibly. So that could possibly be a double top. And this is what the double top would look like. Bearish signal, bearish sign. What if it wasn't a double top? Well, if it wasn't, then we'll break out and then we'll create new all-time highs again. And if we create new all-time highs on the SPY, that'll put it at $704 from there, I think we would have a big pullback, and then it would just keep doing the same thing and pushing. But I think that we're really getting ready for a massive pullback. So uh, be careful. I would say a massive pullback might be coming very soon in all markets. This is the daily chart. Massive pullback could be coming. So it's really hard to tell when you're looking at all this stuff that's like super overbought, and it's staying overbought for an extended period of time. That is a recipe for disaster. So yeah. But anyways, this is all I got for you guys today. Hit the like button, subscribe. This video is an hour long. But yeah, hit the like button, subscribe. Remember, I'm not a financial advisor. None of this is financial advice. And before I close it out, let's just look at Pudgy Penguins. Because I know a lot of people like to see it. I looked at the analytics for the last video, and a lot of people fast forwarded the video to the Pudgy Penguins part. So if I see a bunch of people skip to the end, then I know it's for Pudgy Penguins, and I might need to make dedicated videos for Pudgy Penguins if people want that. But yeah, again, 0.005. I would not be trying to buy this until 0.005. Right now is the time of risk off assets. So altcoins are risk on, so that's why everything's dumping. Crypto in general is risk on, but altcoins are super risk on, and then meme coins are hyper risk on. So meme coins typically crash harder than all these other coins. So I wouldn't even consider Pudgy Penguins as a meme coin because they've solidified themselves as more than that. But most people are going to see it as a meme coin. So anyways, 0.005 for Pudgy Penguins. That's my target price. But just because it goes there doesn't mean it's going to not go below it. I think if it hits 0.005, we might get that relief rally followed by some more dumps. But if the release rally is nice enough, then you might be able to see like big gains on Pudgy Penguins. Like I know you see that like that. You could get some big gains here on Pudgy Penguins. I would say it would probably go up to here to that resistance, but I don't know. I would be extremely careful with these meme coins. But 0.005 is a decent buy in my opinion, and that's pretty much where I've been looking at the whole time. 0.005, 0.004 possibly, but yeah. This is all I got. Hit the like button and subscribe. And remember, I'm not a financial advisor. None of this financial advice. As always, I'll be back with another video.